Yo, what's going on, y'all? Welcome back to another video. In today's video, I kind of want to go over my personal opinion on order flow versus just reading a candlestick chart. This is extremely controversial, but I do not mind talking about it because I truly believe in what I'm going to say right now in this video. Now, before I get started, let me know if you guys prefer having my camera on the side, like a small side of the video, and then having a background, or if you just prefer an entire video to be a webcam. Let me know down below. But nonetheless, I'm gonna go over, and I'm actually right today on my board of order flow versus trading off candlesticks. So trading order flow versus candlesticks. Now, this is my view. Order flow gives no advantage at all compared to candlesticks. And when I say this, I'm calling out a lot of traders on YouTube that are trading purely based on order flow. I'm not saying they're wrong, but what I am saying is they're trying to make it seem like order flow is more important than candlesticks, when in reality that is completely false. In fact, I believe candlesticks are much better representations of price. And I can give you guys many examples, and there's many things I cover in the course about anticipation of price and how you can predict which demand or supply zones will get broken likely, or anything even happens before price even taps into that POI. You will know if it gets broken or not. So you will know to not take any trades within those certain zones. Um, Basically, my view is that order flow. Actually, in fact, before I get into this, I'm gonna give my personal experience trading order flow. Okay, I've traded heat maps, book map, level 2, times and sales. I traded all of that as well as candlesticks. I've done both throughout my 3-year trading um journey. Okay, I've done both of those. Just as a preface, okay, before people start saying that you need experience. I believe that's not a thing. Okay, thing is order flow. First of all, here's a problem with order flow. In fact, here's why I think it's worse than candlesticks. There are many spoofed, ghosted orders. And what I mean by this is two things. Orders can either be placed as in they'll be placed as fake orders. For example, Bookmap, you will see tons of liquidity and orders resting in an area. So then, for example, if you see tons of liquidity area orders resting in demand, at that price area on Bookmap, you think to buy, right? Because all those buying orders are there. But that's completely false. That's not how it works. You have to learn how to anticipate what price is likely to do by precision before it even gets there. Okay. And here's the problem with this, because I've seen this happen more times where price will reach an area of a lot of liquidity where there's a ton of buyers, for example, for demand, and it'll rip straight through. Right? Price would flush straight through the demand zone. Okay. And you'll get your stop loss hit pretty fast. And this is why I believe Bookmap and order flow tools are just a false representation, and you should not be relying on those things to make your trading decisions. Okay. I really don't think so. I really do believe candlesticks are the um, pure bread and butter of trading. And I believe this is really truly one of the only ways to trade properly. Okay, using at least some type of chart or graph. You can't just use orders and order numbers, order amounts, things like that. It just doesn't make sense. It's not that it doesn't make sense, it's just not how it works. So problem number one there it is. There's spoofed and ghosted orders on book maps. So the other thing is not only will it give false representation where like you should be buying and selling, but also what happens is I've seen this happen a lot on book map, especially. Okay. People will put like let's say $40 million of a position. I've seen this happen, okay? One singular candle on, this is oil, but on SPY, for example, for ES, one singular small candle, 0.03% of the asset is around $15 million, okay? meaning it takes around $15 million to move the market like just a little bit. So I've seen orders of 40 million get placed set as limit orders, okay, at supply demand. And what happens is when price gets near that area, people that set those orders will immediately remove them, meaning they're basically faking out all the traders that are trying to believe that there's 40 million orders there, when in reality, there's immediately removing that limit order as soon as price almost gets there. So then you get cooked because now your limit order or your execution is wrong because there's actually not 40 million orders there anymore. They just took off the order. Okay. Ghosting orders. That's what it's called. They purposely put fake orders. I want to say they're not fake orders, but they're real orders that just haven't been executed yet. They place it there to try to entice people to buy there or sell there, and it just to later on remove it. Okay, and it happens so quick where you can even use bots and algorithms to do ghosting with orders. And it's, no matter how morally messed up that sounds, that's just how it works. 80% of the trading volume now is algorithmic. So this is what people are doing nowadays, okay, to do with a lot of money. So that's another problem that I have with order flow. Okay, spoofed orders on both sides. Now, another problem with order flow trading, and when I say order flow trading, I'm saying almost purely based on order flow, is no context. There's almost no context when you're trading off order flow. If you see in the ladder of time and sales, bids and asks, and a volume amount, okay, this is horrible drawing, but when you see it, like there's no context. This is just a certain like area, or not even area, a certain just price point that you have no context built upon based on structure and liquidity, which is what I teach, these structure models, right? There's no context built upon these numbers you're looking at. Okay, so that's number two. There's really no context being built. You could be a lot of people, and I call out names on YouTube, big names also. They're saying, I bought here because there were a lot of sellers or buyers. So in this case, a lot of buyers. There's no context here. Okay. They're saying there's buying pressure here. Okay. And what? There's a lot of times where price will give you that buying pressure or selling pressure, like for example here. You might be selling this, okay, just so they would get stopped out anyway. Just miss this entire move later. So there's no context when you're looking at these orders coming through. For example, this quantity of about 10 candles here on oil would represent about 50 million in selling orders being placed through, as well as buying, but let's say there's 50 million more selling orders being placed. So from a time to sales or orders book map, you will see that much money being injected into the market, but that does not mean anything, okay? You don't know the ultimate goal of the people trying to inject that money into the market. You don't know if they're actually targeting for their actual move or if they're just targeting somewhere else to just push price higher and entice people. It's a trap. You really don't know. That's why you need to learn how to read candlestick charts because then you'll be able to anticipate exactly which areas you should be managing your trades before it even gets there, right? Like I would be managing my trade here already, for example, before my stop loss gets hit, or before I even see these orders come in, right? It's just anticipation of price, which is extremely important. That will improve your win rate significantly. So that's problem number two. Now problem number three. Okay. All right, so this last point is extremely important. Okay, I can't emphasize how important this is. The main problem with order flow trading is you don't have proof of a statistical edge that you can back test. Okay, I truly believe in data collection and statistics and math, ultimately math. Okay, math is extremely important in trading. That's why you have quant traders. Now, how they trade quantitatively is obviously different. They don't trade technically off for technical analysis. They trade off trading algorithms that use a lot of math calculations to give them a statistical advantage. That's how they're trading. And how we want to trade as retail traders is also something similar. except obviously we don't have as much math knowledge as them to create these algorithms. But we can obviously create our own mechanical systems and strategies. So my third problem really is can't you just don't have proof for bad testing data off training order flow, because everyone that's training order flow online, they're saying this: I buy here because there's tons of buying pressure. I sold here because there's tons of selling pressure. Like what, bro? Like if it was that easy, with no model or anything, if it was that easy, bro, anyone could do that. Oh, it's going down. Dude, people trading off order flow is kind of similar to the same thing as, oh, I see prices going down. Because on the order flow, you'll see a lot of selling. Prices going down. I'll just sell. And they later get stopped out. Price is selling. I'll just sell. Stopped out. Price is selling. I'll just sell. Stopped out again. No context built upon any of their trades. That's the problem. And so problem three builds upon this. Since it is something very discretionary, I like to call it discretionary trading, I do believe that some level of experience is needed to be profitable, but it should be something that optimizes your trading system. Okay. It's like diminishing returns. There's only so much experience you can gain in trading before it falls off to just pure data and probabilities. Okay. There's only so much optimization you can do to a system. So trading off order flow, the problem really is you just can't back test it at all. It's just not mechanical at all. You're trading off seeing these random numbers without an algorithm. If you programmed your own mathematical algorithm to look at the order flow coming in and have your own mathematical equations that give you an edge, statistical edge over the market, then yes, that's great. That is back testable because you have something that's fully mechanical, which is a mathematical equation. But if you're looking with your own eyes and just saying there's a lot of buyers or there's a lot of sellers, that is not something you can back test, okay? Unlike a candlestick chart where I can say maybe there's a fair value gap here, there's imbalances here. Oh, there's something here. Or oh, this is the internal structure here. Structure changed, right? You cannot see structure when you're trading order flow. Okay. I think you can see imbalances, but you cannot see structure when you're trading order flow. It's also you can't see like it's not how it works. Okay. So that's why I believe a chart gives you the most tools and resources you'll need to make the best trading decisions. And that order flow is mostly just it's to me it's almost gambling if you're just trading purely off order flow. Now, if you have your chart of something mechanical based on candles, okay, and you're using order flow as a way of confirming the trades, maybe let's say you have this area marked out here, and you then switch it to your order flow tool and start seeing how price delivers here, then maybe I could somewhat understand. I believe you should just get rid of it unless you have statistical back tested data showing that you looking at that order flow is helping you a lot more than just looking at a naked chart. Okay, like right here. This is the thing. Candlesticks represent order flow, right? $10 million, $20 million, $20 million, $20 million, $20 million buying up, $10 million buying down, $20 million buying up. Like there's no context if you're just seeing that on an order flow chart. And let's say you see a total of 50 million orders buying down here. Well, guess what? You got stopped out. Look at that. Equal highs, you got stopped out. Okay? You got stopped out. Despite you using confirmation of order flow, they call discretionary, you still got stopped out. Sorry. This is not how this works. Okay? And look what happens later when you see this again, you're like, oh, there's 40 million orders of selling pressure. Let me enter again. Get stopped out again. There's just no context, and it's not something you can really mechanically back test. I believe you need some sort of mechanical aspect to your system. It cannot be fully discretionary. which is the problem with people that are trading off purely order flow. So that's basically it for my view on order flow. Let me know what you guys think of order flow, but it's from my 3 years experience of trading both naked charts and order flow. Order flow never just it just doesn't it's not that it doesn't work. It just doesn't it's not a valid thing to just base a trade off of purely, okay? That's basically my take on order flow. And yeah.